Listen, I need to tell you something that's happening right now in the crypto world, and trust me, you're going to want to hear this because it's already affecting your wallet whether you know it or not. Right now, as I'm speaking to you on January 20th, 2026, Bitcoin just dropped 3% this morning and is hovering around $92,000. Ethereum fell even harder, down over 3%, now trading below $3,200. And here's the kicker, the GameFi sector. Those blockchain gaming tokens everyone was hyped about, they're getting absolutely hammered the worst. But here's what most people aren't talking about. This isn't just another random Tuesday in crypto. This is happening on the exact same day as Trump's second inauguration, and the timing couldn't be more significant. Because while the markets are bleeding red right now, there's a much bigger story unfolding behind the scenes that could completely reshape the entire cryptocurrency landscape in America. Let me take you back for a second. Last July, Trump did something no president had ever done before. He signed the Genius Act into law, making it the very first official regulatory framework for stablecoins in United States history. Think about that. For years, crypto operated in this gray area, this regulatory no man's land where nobody really knew what was legal and what wasn't. Trump changed that game entirely, but he didn't stop there. During his second term, he went even further and explicitly banned the Federal Reserve from developing a central bank digital currency. That's huge. While countries like China are racing to create their own government-controlled digital currencies, Trump basically said not here, not in America. He's drawing a line in the sand between decentralized crypto and government-controlled digital money. Now here's where it gets really interesting. Just 8 days ago, on January 12th, a new platform called World Liberty Markets went live. And guess who's listed as the co-founder emeritus? Donald Trump himself. This platform lets users lend and borrow digital assets, essentially creating a decentralized financial marketplace. The Trump family isn't just talking about crypto. They're actively building in the space through World Liberty Financial. But while all this is happening, there's serious tension brewing in Washington. The Senate Banking Committee just delayed a major digital asset bill on Wednesday, and here's why you should care. Coinbase, one of the biggest crypto exchanges in America, actually pulled their support for the latest version of this bill. Why? Because the new version includes limitations on stablecoin holdings, specifically restrictions on yield and rewards that users can earn. Coinbase looked at those restrictions and said, no thanks, we're out. This is causing a massive rift in the industry. You've got Trump's administration pushing for crypto-friendly policies. You've got major companies like Coinbase pushing back on specific regulations. And you've got lawmakers stuck in the middle trying to figure out how to actually regulate this thing without killing innovation. Meanwhile, the Digital Asset Clarity Act is still sitting in the Senate gathering dust. Industry insiders are expecting a vote sometime between now and June of this year, but nobody really knows if or when that's actually going to happen. Every day that passes without clear regulations is another day of uncertainty, and markets absolutely hate uncertainty. And speaking of markets hating uncertainty, let me hit you with another number that should make you sit up and pay attention. Last week alone, cryptocurrency investment products saw outflows of over $952 million. That's nearly $1 billion flowing out of crypto investments in just 7 days. According to CoinShares data, investors are pulling their money out at a rate we haven't seen in months. So what's really going on here? Why are prices dropping on what should be a celebratory day for crypto advocates with a pro-crypto president taking office? Here's my take. The market is caught in this weird paradox right now. On one hand, you've got the most crypto-friendly administration in American history. Trump has made it crystal clear that he wants America to be the global leader in digital assets. He's signing bills, he's blocking central bank digital currencies, he's even putting his name on crypto platforms. But on the other hand, the actual regulatory framework that the industry desperately needs is stuck in political gridlock. The Senate can't agree on basic stuff like whether stablecoin holders should be able to earn yield. Major players like Coinbase are withdrawing support from bills that seemed promising just weeks ago. And all of this uncertainty is making institutional investors nervous. See, institutional money, the big players, the hedge funds, the pension funds, they need clarity. They need to know exactly what the rules are before they commit billions of dollars. And right now, despite all the pro-crypto rhetoric coming from the White House, the actual rules are still unclear. That's why you're seeing these outflows. That's why prices are dropping. But here's what you need to understand. This volatility, this uncertainty, this is actually a critical moment. We're watching the birth of crypto regulation in real time. Every bill that gets proposed, every amendment that gets added, every company that pushes back, it's all shaping what crypto is going to look like in America for the next decade. The Genius Act that Trump signed last year was just the beginning. It dealt specifically with stablecoins, those cryptocurrencies pegged to the dollar. But there are hundreds of other digital assets that still don't have clear regulatory guidance. What about Bitcoin? What about Ethereum? What about all these DeFi protocols and NFTs and Layer 2 solutions? The rules are still being written. And while those rules are being written, you're going to see days like today. Days where the market drops 3% because investors are spooked. Days where major companies pull their support from legislation because they don't like specific clauses. Days where billions of dollars flow out of the market because nobody knows what's coming next. But here's the thing that a lot of people are missing. This regulatory uncertainty, as painful as it is right now, it's actually necessary. Would you rather have clear, well-thought-out regulations that take time to develop, or would you rather have rushed legislation that kills innovation and drives the entire industry overseas? Because that's the real choice here. Trump's administration seems to understand this. They're moving forward with crypto-friendly policies, but they're also taking their time to get it right. The World Liberty Markets platform launch shows they're committed to building in this space. The Genius Act shows they're willing to create frameworks that work. The ban on central bank digital currencies shows they understand the difference between government control and decentralized finance. So where does this leave us today, on January 20th, 2026? Bitcoin is down around 92,000. Ethereum is below 3,200. Nearly $1 billion flowed out of crypto investments last week. The Senate is delaying key legislation. Coinbase is pulling support from bills. The GameFi sector is getting crushed. But zoom out for a second. Look at the bigger picture. We have a president who calls himself a co-founder of a crypto platform. We have the first ever federal stablecoin framework already signed into law. We have an administration that's explicitly protecting decentralized crypto from government takeover. We have major legislative proposals working their way through Congress that could provide the clarity the industry has been begging for. This isn't the end of crypto in America. This is just the messy, volatile, uncertain middle part where the rules are being written, and everyone's fighting over what those rules should say. And yeah, it's painful if you're watching your portfolio drop. But if you believe in the long-term potential of this technology, if you believe that blockchain and cryptocurrency are going to fundamentally change how we think about money and ownership and trust, then days like today are just noise. The real story isn't the 3% drop this morning. The real story is that we're living through the moment when cryptocurrency transitions from the Wild West to a regulated, legitimate asset class in the world's largest economy. And that transition was never going to be smooth or easy or quick. So keep your eyes on what matters. Watch what Congress does with the Digital Asset Clarity Act in the coming months. Watch how the industry responds to the stablecoin regulations. Watch whether more companies follow Trump's lead and start building platforms and products in this space. Watch whether institutional money starts flowing back in once there's more regulatory certainty. Because make no mistake, that money is waiting on the sidelines right now. Billions and billions of dollars in institutional capital that wants to get into crypto, but needs clear rules first. And when those rules finally come, when the uncertainty lifts, that's when things could get really interesting. That's when you might look back at $92,000 Bitcoin and think, wow, that was actually a bargain.